back in the sling. Back in the sling of it all. Swinging from the trees. Got my girlfriend on guitar here. She's so good at it. Nashville. I'd say this girl should have a bigger audience than Madonna or Lady Gaga. Okay, so did anybody trade the 4-hour breakout system? So another thing that was really triggered by is this guy I subscribed to, Michael Norman, or Norman Michaels or something. And he's like this SEAL Team 6 guy. So he's really all SEAL Team 6 about it. Like, that's the shit. So I get the idea that you would hang in there and go down with the ship. I'm into that. But I think you could do both. You could trade like these people do that are very simple about it. And you can trade complex about it. YouTube doesn't give me a volume increment. It's either X'd out. There, my mouse is right on the edge. So I have to speak around her. All right, I'm bored already. So we're treading water. Buying into the low of the week now for another unfair value as far as if you're bullish. You're very underwater if you bought the top of that. If you didn't get in the breakouts, then you really kind of missed out, I think. So I do think you got to have this volatility breakout system. I think it's a really important part of the whole balanced diet, because if you just stick to this one thing, okay. And scalping is pretty tough if you don't have the in other words, if you're going to scalp with 1Ks, it's going to be difficult, right? So typically you think of people scalping like 10K, 20K on one ticket, but you can let the market involve you in 22K. You don't have to choose at that moment in time where it's going to be, right? So you can let the market decide for you, which is pretty nice. And I think that's the trick, is let the market decide for you. Now, it's not really good because it's not a really control freak's standpoint, or it's not really even a person that's directing their life standpoint. So you wouldn't put on a trade unless you thought it was a winner. That's a classic. And it sounds really stupid. In one way it sounds stupid. Another way it sounds really brilliant, just because it's in your face, direct truth. So you can put the moving averages up, and you can put up the RSIs, and you can talk about divergences, but in the end it's going to be like, okay, the market's going to go up 55 pips. And if you think right now the market's going to go up 10 pips or down 10 pips, what would you do here? And of course, we just got a doji here on the 4-hour chart. Well, obviously, it's either going to be a trend continuation or it's going to be a reversal. And the lowest risk trade is going to be the one that after 4 hours, there is not a lot of true range. I really shouldn't call it ATR because that means average true range, but just pure true range bot. Like if you had a true range bot as opposed to an ATR bot, that would be the way you would do it. So pure mechanical trading is always going to be whichever way the wind blows, stop entry tight stops with maybe ratios of 1 to 3 and on and on, up the scale. You can't be too greedy because you're never going to see your risk 1 to make 5 as often as you're going to see your risk 2 to make 1. So if you were to do the math on that, it's like a loss leader. If you own a store, you're going to have bullshit out there you're losing money on, but it's bringing people in the store. So you have to have that kind of balance, I think. So it's about balance. So it always has been about that, and oddly enough, the balance in your account and all these things. And it's a problem with the trading thing. It's not like the fantasy football thing. I don't know if those guys are adding up how much that guy made in a year and paying each other out. Now, I don't know if that's even I should ask the guy, is that something you can run on the side? Okay, we're doing fantasy football, but it's a front just for, really, we're just gambling. So you can make the same argument for putting real money in a real forex account that you are actually in this game. And you're kind of riding along with the herd. So you really are in a fantasy football. You get to pick the instrument, and you get to pick when it plays. Actually, this or when you're in the play. And if you only trade 3 times a week, okay, now that means the 4-hour chart you could get 3 good. Somebody just emailed me, and their name was Great Trade Entry or something. So that's definitely, everybody's aiming at that, right? Now, of course, just like if you're, unfortunately, I hate to say pushing a string, but if you're forcing that setup because it makes a lot of money, when the market breaks out of these narrow ranges, it could be that there's an initial fake out on the 1-hour chart. Or sometimes there's a clean break, though. So that's why it's difficult. That's why people back test, because they say, well, it worked here, but it didn't work there, and therefore we have to go and do more testing. When that wasn't the problem. They both worked. It was just, did they work dollar-wise? So if you're, in other words, this guy Laugh Crime that's back commenting, when he said he was willing to risk $644 or $329.48 per trade, I thought, my God, you must have taken like your account and taken 10% or 1% and go, okay, this is my risk per trade. And now it's not that that's not unreasonable, but then you would have to back test the shit out of that, because that'd be a kick-ass fucking trading program, right? I mean, you're going to tell me, well, I always risk 3% of the account and I'm just killing. Yeah, okay, but you're managing the shit out of that one trade. You're moving the trailing stop. And how long are you going to chill and watch the market? Now, if you're doing something constructive in the background, surfing porn or something, then it's a different lifestyle. But it's not a good work ethic to stare at a screen and think, so this is it. This is the glam of trading. And it was very glamorous for the 4-hour breakout traders, because you can see their entry was just like about yesterday. So we had a dead cat bounce in Asia, and we just, once again, the morons got it right. The moron bot that trades low volatility breakout. Now here's where the moron bot got its little bit trap here, but I would say we always have to have at least 20K running, and we're out of 10, and the rest floats, and maybe we cash out of that and go flat. We always want to be winning. Now, you would say let your profits run, but not if you're seriously trying to go up, build the account, because the best position is to be flat, waiting to get filled. And if waiting to get filled means that your order is 3.9 pips deep from right now and it lasts for half an hour, then therefore that ticket would be, these are the things you have exposure to fill at that point. You could be 15 minutes from getting involved in the trade. So this, people, imagine people do this, okay? I just found it made it too nerve-wracking to worry about one single trade. So this idea that you're watching, waiting for divergence, you're like, oh yeah, look at it's just going to diverge any day now. I mean, any hour now, and then it does. It's dead cat bounce, and you're like, fuck, man. To switch gears from divergence is obviously a reversal entry, but it could be positive negative reversals. In other words, what some people call counter divergence, whatever you want to call it. In other words, if you study RSI, the end of wave 4, there's a pullback, and RSI is more oversold than it is at the trough of wave 2. So if you're Elliottician, 0 is ultimately where you want to get in. Wave 1 is your coffee shop. You meet her at the coffee shop. Wave 2 is she calls you in 2 days. Wave 3, you fuck her brains out. Wave 4, you're thinking about getting married. Wave 5, you get married and it's over. Or whatever, however you see that. The way these price pulses go. So looking at that, and people can make speculations and like, oh, we're coming at the end of wave. For now, if you ever trade Elliott wave and you're like, is wave 4 going to stop? Well, wave 4 is like the longest wave. It's like 80% of the market's wave 4. So 80% is a big, long, drifty triangle, I suppose. And 20% of the market's screaming in one direction. So even on this chart here, we got 20% down as far as price over time, change over time. So it's screaming down really hard, like 20 hours down. Another one, final gasp. Can't really count the Elliott waves on here. I guess this is, wave 3 is the biggest. But Elliott wave is just, it lives in your mind like Fibonacci. It's just one of these templates for movement. It never correlates exactly. You cannot. So anybody that does the Elliott wave, and the argument's gone forever. They're like, dude, how can you count that? You're back counting from where you're at to justify all these other waves. You have to admit that. It's not a song. It's not a linear song. It's not a hit song. It's like if you just all of a sudden change songs. The market's changing, like it's playing 10 songs in different genres with different lengths. So yeah, it'll do a thing, but it does it in a way that's on the 15-minute chart, and you're like, oh, look at this thing, huh? Shit, if that was on the monthly, I mean, that'd be like 1,000 pips. So you could look at any chart, and if you looked at enough of them, you can't tell what time frame you're on to some regard. I mean, this could be a 1-minute chart, and it could be a weekly chart, I suppose. Pretty, depending how you zoom it, frame it. So how you frame it, and then it speaks to how you're going to play it. If you're playing poker or something, you get a hand. Now it's how you view that hand, and if you're thinking about the cards that aren't there, which is the vacuum. So this is if you're playing poker. What cards haven't been played? It's not the cards that have been played. You're not looking at price and going, oh, look at it. It's like, oh no, where's it? So where's the void? Where's everything out of balance? So come back in the balance, and now here we are. Taking out the lows from last week. So it was a true edge-to-edge play. If you sold the high of the week and come into Wednesday here, and then you cashed out at the low of last week, Friday's low, you could say you're done. That's a lot of pips, and even if you only traded one ticket, but you'd have to keep doing that same trade, the big engulf reversal trades. You go from currency to currency pair and go, oh, who's next, right? And what about when this thing drops into just uncharted waters? Then what's it going to be like? Say it comes, like I said, all the way down here, It just keeps melting. And what are these other things doing? That NASDAQ is cooked. It's over. You could say that and it just keeps going up, but I think it's done. I mean, look at NASDAQ monthly. It's the end of the year. NASDAQ is not shy about doing this move. It's been a while, so I'll come back to that. I'll start nibbling at this Bitcoin here. Let's see what we got here. Bitcoin's melting down, so I think it's fatalistic for Bitcoin, but definitely a buyer at 4,500 for a real trade. For a real swing trade, I buy at 4,500, but I'd buy all the way down there, I suppose. Dollar cost average. I mean, that's really all I'm doing in the forex, and adding to a loser incrementally, if need be. Adding to a winner is pretty tough because then you're really cheering for your side of the team. But sometimes you have to, and this would be when the market gets quiet. You're like, well, I guess it's going to keep going up. I better get in. You almost have to think like the guy that's losing, that's buying back. You can either think like the guy that's losing, that's going, holy shit, I got to get out of this trade. So what's the difference between the guy that says, I got to get out of this trade, and you're the guy that's like, man, I got to get into this trade. Like, I've got to do it because I know this is what needs to be done. Even though all my Fibonacci's and all my moving averages and all my harebrained schemes of geometry are telling me that it should go the other way. It's not. So this is the brutal. I guess this is like, okay, you get the Elliott Wave version. You go to the coffee shop. She calls you. It turns out you take her home. Turns out it's a dude. Now, could you play that? A lot of people would have a hard time. Oh, I'm just gonna. Well, I'll have sex anyways. It's it's just a trade, dude. So I'm going short instead of long on this one. I don't think a lot of people could switch gears like that. I mean, it's a real mental flexibility. Pretty tough. I do like the idea of catching a falling knife. So to me, what if the knife's going to drop 5 pips and I'm going to give it 15 minutes to get there? Pretty fast knife drop. And then if I put another cushion, another order bank down in deeper and just walk away and just say, I ain't got time for this. Like 911 check. I ain't got time for this. Or you're going to snipe it. You're going to be brilliant in the moment. The 5-minute chart. I mean, these are all different approaches that all make money if you do it with the right sizing and the right frequency, the right amount of rinse and repeats. And you could also be holding. So you could have another account, and this would be another challenge to anybody that's impatient, is you just open a shitty account with like $200 in it, like this guy that's all of a sudden ignored me when I gave him a thing. So, yeah, hey, you know what? Just throw $100 in there, $200 in there, and just trade single dumbass fucking, just put 1,000 pips stop in there. Just to put no stop in a 1K and $100 account. You'd be surprised how much you'd be like, holy shit, look at this stupid fucking trade I'm in. I'm up or I'm down or. Now you could add, every week you add. I think the problem is people get in a car and with leverage, I suppose this is the problem with leverage. It's like your car goes into not first gear, but it goes into a gear that is so low that you could be at red line the engine, pop the clutch, and it's just like, whoa. You just destroy the tire. I mean, you don't. You're, in other words, you're just in creeper gear, but you destroy the engine. And then, this is really like dropping it in the top gear, I suppose, the analogy. Then you get like fucking, all of a sudden you're hitting, and you'd blow the universal joints and everything. Yeah, so Bitcoin is very fascinating, and it's just so funny to think that we could come all the way back to 4,500 and there'd be a big psycho freak out if it was at 3,000. You can only imagine what people will say. And it's so cute to see the crowd freak out. Same thing with gold here. End of the year's coming. What's the guppy doing, huh? Nothing really. It's all tame. That's 50 pip grid there. So yeah, that was a hell of a nice trade here. Look at this daily hedge. You put your sell limits at new highs. There you go. Right on that rooftop there. It's fucking amazing. That's 200 pip winner. 50 pip stop. 50 pips stop to make 200 pips. That's the gift that keeps on giving, and you're still up on the trade even if you bought this stop hunt here. So you're up. You could claim you're still up on the trade. Oh, look at them fucking winning trade. And that's so funny because these people, I don't know what it is about trading. Honestly, I don't think people argue about music like this. Or even sex. Can you imagine? No, do that position. You're kidding? Missionary? Dude. No, we're both on a swing. Zero gravity. I mean, I've rented a zero gravity booth to bang in. So, but this can melt down too. Look at the guppy. There's a huge hole beneath. So it could go either way. But boy, that's quite a nice double bottom. See, people say, oh, this double bottom on the daily. Okay, great. But what are you going to buy? Bet the ranch here? Where are you going to put your stop? Well, textbook would say, put your stop here. But you may have to put your stop here. But that sucks because that's where the best place to get in. Then you're like, okay, we got to come up with some better plans then. You can still do those trades, but now you got to make some money now. Right here on the 1 hour because you ain't got time for this. You got to trade the 1 hour chart. I'm sorry. Look at this breakout here. This is probably just before the news came out. Now, the trailing stop bot, and it would make money in slippage. It wouldn't matter. You made so many pips here. So here we're drifting down. No fill on the long side. First fill. Okay. Then no fill, fill. So you're long from here and you're long from here. How'd that work out for you? You got stops here and here. How'd that work out for you? Fucking beautiful. That is the best fucking setup on this chart. So people say, well, you can't trade the past. You're trading the past, son. No. I'm trading what the robot would have traded. I'm just back testing it. Sell stops, no fill. First fill, a little bit of money. Your protection for going short is here, so it's break even at this point. Then we get trapped. Then we make more money in this direction. Then our first fill is here. And if you let the robot get in every hour, it's dropping a sell stop with a narrow range. That's why this is such a dramatic move. Because it's cascading into all the money management bots that run a 5-hour scheme. Right, so that it's tightening up. It doesn't tighten up. And this is the basement that you raid. You need to have your buy limits right here on these wicks. So you're long on limits, you're long on stops when we reverse. You made money, hopefully, too, and you can start bailing here. This is the stop. So everything, depending on how much money you have. So if you have enough money, you're going to buy 1, 2, 3, 4, 5, 6, 7, 8, 9, 10K. Like every 5 pips you're in. So you're at 20K here. And so, plus you're getting filled here. Now, you've scalped out of something by here, and once you breach this, so don't forget there are people that would sell this new high, this handle, this handle, this handle, and they wish they would have got filled here. This guy cashes out 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 right now, and they're all winners. See how that is? These are all winners. You could have held these to the bottom, or you could have cashed out early here. So it's really hard to This one would have cashed out maybe just to the top. So, and maybe the ratio is bad. And maybe you had one in here. So if you can imagine, you had one here that was just a scalp with a lot more risk. It didn't get stopped out. So imagine you spent the time, because if you're just going to sit here and look at the market all day, to place those tickets and then walk away and just say, okay, it's like dominoes. Whatever happens, you can't control it. Here, just about to get filled on sell stops here. So this is the first quiet session coming into, that's coming into Asia, last day of the week. 15 minutes just to update. So go to 15. Look how quiet that thing is. Pretty bombastic earlier. Okay. Look at that 15 minute. Now the 15-minute robot would have stacked up. So you just have to imagine this pressure's building here as a trap. Then really no trap. And also no liability to the long side with a trailing buy stop. Then here, first trap, and then there's a stop hunt for the people that got trapped here. Okay, got them. Here is a breakout. If you didn't care about volatility, you just take every buy stop. So here's buy stops are stacking up. Now you've made up for this loss, and that's where the selling begins. And this is why you have this kind of top bottom here, because as soon as she comes back to the breakout point, you can only see that on the 15 though. So the problem is in the 1 hour chart, that's just going to be a mesh. So this thing, when you're looking for tops and bottoms, yeah, you know, if you're going to trade tops and bottoms, you can have a lot more on the 15 to trade. This 30-minute chart. 15 minutes is going to be really crazy. This is a lot. A half-hour chart is a lot of data. It's 48, you know, but if you look at this and your half-hour bot, 15-minute bot's going to get whipsawed. It's going to get too many breakouts. The 1 hour bot is going to outperform the 30-minute, but the 30-minute has tighter stops and it's able to make something. And then the 4 hour bot is, you could probably do that. You probably wouldn't need a robot for that, but the half-hour bot is something you don't want to manage a half-hour chart. I mean, you can go away somewhere for 4 hours, come back and be like, oh, okay, finally the thing's ready to go. You're staring at the tick chart and you're making $80 an hour. It's different. You can make $80 a day and not have to look at the thing. So a lot of people want to make $80 an hour because they do the math. There's like 8 or 10 hours of trading. It's going to make $800. I guess so, but that presupposes the market's moving and not blowing out your stops because you happen to be running trade plans that run a specific stop that happens to fit the instrument you're doing. It's very complicated because as soon as you switch instruments, then you think, oh, I'm going to use this on that. Okay, now you got to watch that market, because when that market is not in other words, if you realize that trade's not working or it's tying up too much margin, and you're like, yeah, just get out, fucking. It should have blown. So you should have a clue that this thing's about to pop. And maybe you can handle a 4 hour accumulation, building a position. And you're like, well, you know, the verdict's going to be in. I keep on building into it on one case, so I'm going to just keep building and building and building. And then, boom, and it takes off. And that's the best trade, because then you're cashed out. It's over. You can relax. You could have bought this, pull back here. So according to the trade at the market scheme, which entails you saying, well, if it goes up really hard for a half hour, I will sell. I will sell at the market regardless. But here you have to do with a 50 pip stop. This thing explodes 200 pips here. Almost, 200 pips. If you consider just slowly blow here. So the thing blows up. And at that point, you if you were, the news is out and it's over, and it's sheared north, and it comes flying back. Now, a couple things here. There's got to be at least probably endless scenarios for this trade, but you could have bought this double bottom in the half hour, buy stops here, and instead of getting out here, you came all the way back here, and you're like, oh fuck. Then you waited, and then get out here. Or you just couldn't wait for it to go up here. You weren't in the market yet, and you just sold into that, and it came ripping back, and you didn't get out, and it went to here. Or you got out of everything right there, and you went long a little bit. Or, I mean, it's just on and on. Like, there's so many different things you could do. Here it looks like about to fill the buy stop. It's going to fill for a little bounce to here. And I think the sellers would probably come in there. But then it's like, okay, how big do you size these positions? How often do you trade? And just such a boring thing, isn't it? Like I said, when the news comes out, it's fun, exciting. You could have the orders stacking. And, even the robots that... I think the ultimate robot trades all the time, because you can't trade all the time. He should be able to manage, maybe he has a spread filter so he doesn't trade unless the spreads go tight. Maybe do turn him off in Asia, or turn him off at 5 p.m. Eastern Standard Time when the spreads just go ridiculously wide. Got some brokers that for 5 minutes you can't even trade. That's like a big rollover. There's just nothing. There's nothing there. And but yeah, the violence of these markets is just staggering. Go just from currency to currency here. Look at this stuff. There's dollar CAD. That was my analysis. Trendline break, come back, but you still would have had to get in here, and it wouldn't even matter if that's geometry. It doesn't matter in a way, because like the way people think about a demo account, you're just demoing a situation. There's nothing you can make money from that trend line now, and I'm not even sure you could have made money from the break of that trend line. Just because that trend line broke, it's like, well, what did you do about it? Did you buy the pullback into the trend line here where it just amazingly came back to here? Well, you didn't have to do that. And maybe it's just coincidence that it's like this, because it didn't. In other words, it already broke. Well, there was a trend line here that broke initially. It did not retest that one. And you could have just had an order here in the 50 pip window because you knew that this was the big horizontal structure. Because the problem with the trend line projections is they're just kind of like, it's just not a perfect, it's too skewed out in the future. We don't know how fast the market's going to get to its destination. Sometimes it's immediate, and sometimes it's drifty, if it even makes it there. And I think this dollar CAD, well, like I said, I was always looking at this place to sell here. Anything above that, up into here. And this is a 50 pip grid also. So, I don't know. Scalping is not like just trading 3 tickets a week. Look at this thing, deep discount priced. The buyers came in on that one. So this looks like it's ready to go to hell, New Zealand. Big meltdown here. The pound looks like it's coming back to life. It's the weekly euro. Pretty quiet there. Looks like they trap people. So here was your really clean doji trade. Put the trade on right here. So the sell stop here would have been triggered, and if you were to sell new, now this is where it just doesn't make sense. If you told somebody, well, what you want to do is sell new highs, and they'll be like, I thought you said buy new highs. Well, you do both, because the market's going to determine which one is the more better trade. Which one, because you have to have 3 tickets. Say there's 3 buy stops, 1 pip apart. And one of those is going to take 30% of the position off. It's just going to be cashing out. And you've also got the orders stacking up in the other direction. And when you say buy new lows, it's better if they're, kind of cutting into history. They're new in the sense they're just showing up after like not being around for 2 years, so they're new like that. It's not like, okay, so if you tell people I'm selling new highs, how are you making money? I'm selling new highs. Well, I'm selling historic highs. And then people would say, oh, well, it's been there before. History. I'm not talking the total history. I'm saying by selling 20-hour highs. Those would be the better trade, right? So if you were to say, okay, I'm buying new lows, the newest ones to show up lately. And you can make the argument that you finally made money here and the buy stops get filled, but you're buying new highs. So I can understand the confusion. It's like, well, how can you just say you're going to... Yeah, so that's tough. And the volatility being the filter. So it's almost like you'd have to say, well, when the volatility is low, you want to buy new highs because you're getting fills on the breakout. And you want to sell new lows, but they have to become new 1 bar back. So if you're selling new highs after the market is spiked, that's a great trade because that's the highest probability that is not going to last, that move. And it's such a dramatic move that you're looking for the market to take a breath there. So when this goes down hard, if you buy new lows, you wouldn't touch this candle because it closed up. I guess be selling. You'd be cashing out of something, but if you bought here, and you bought this candle, so you bought more here than you bought here because it's down bigger. So it's completely counterintuitive. And here you don't buy as much because it's not down as dramatic. If it was down here, then you'd load the wagon and you'd go, honey, go get in a second mortgage because we'll make so much fucking money. She's like, but it's going against you. But this one becomes a winner to here. This one is a winner to now, depending on where you cash out everything. You can either wrap it up here into the previous floor where everything started, where the whole party started. So this is your cup and handle trade. This is the cup. So you have to be the cup in this scenario. You be the cup. And it's tough because you would have bought heavy here, buy light and buy light. Well, this one, you bought heavy there, but man, this is where it's a transition into the other trading style. On the fly, this is a daily chart, so you got plenty of time to adjust. Plenty of time to, but you probably have to go back down the 4-hour chart for order placement, stop hunt of the new lows, new highs. But look at this new high in here. Now this is right. This is a breakout trap, right? But so is that. So if you sold new highs here on the 4-hour chart, they are new highs. On the daily, you're only 1 bar back. So here's a big problem. Patterns that are created like a head and shoulders, you need to have a zigzag, and there's no zigzags visible in the daily. So this new high here is like a 24-hour new high, which on the hourly chart, I can't really zoom in, unfortunately, and slice into that. There's probably a way to do it. But there's got to be a beautiful kind of like where it drifts up into this little area, and it's like, oh, that's it, bye-bye. In other words, this little rooftop area when you over there in Britain and you're looking down the thing and they got those rooftops that are terraced in the hill, and it's just slightly different, and it stacks up to a bunch of little shelves, but really maybe one story, and there's like 20 increments, and that's how I see it. And then boom, and then just the utter violent turnarounds in these markets are just exquisite, right? If you're a candlestick trader and you just trade high probability and you have stuff built in there, there's not a lot of trades here, but they're amazing, right? These gravestone entries here, this one, got these reversals, this one, just mind blower. So just in the simplest terms, right? So now what? We just had a doji today, and the market just opened, so they're painting our last candle for the week. Is the euro going to march north? Is this the last move here, or is it done and they've trapped people here on this fake breakout on the daily? We're going to go down. So we have to go to the I'd say just go to the 1 hour chart. Zoom out one level. Let's see. Yeah, that's quite a bit of data. We better go to the 4 hour chart. So it's just too much. It's not worth it. Okay, so I have a buy stop here and a sell stop there. And so the 4 hour, the daily, there's only 6 bars a day. And that's it's clean. You could go trade 20 pairs like this and just make a mint, obviously. Presupposing you don't mind not deciding so much which direction market's going to go, because as soon as they fill your stop entries, you'd be like, yeah, no, this is like stupid. I should have just got in earlier before it went up. But like I said, it's defensive trading. There is no fill if the market does not go there, and they could still trap you. And then you can take the approach that every 4 hours, like here, big down for 4 hours, you could have said, okay, well, I bought here and I bought here and I'm not going to buy anymore. And you could have taken something off the table here, and then you bought really heavy and you didn't touch it, and you bought really heavy. In other words, big down, you buy. And you're up on all these trades, and this one you were up for a little bit if you could have sustained that punishment. Same thing could be said for the sell side. Up big, sell, up big, sell. Here you break even. And so I was talking about being the guy that's in the losing trade. He sells here. He's like, damn, this isn't making no money. And that's what causes these pivots. So I do think these are true psychological pivots based on, well, that trade's not working for me anymore. In other words, if you sold really hard here and you're like, oh yeah, it's just going to keep tanking, as it drifts up, you're like, holy shit. Actually, this move here, people got out. And then we start over here. And of course, this is the beginning of the week. So that's Sunday's gap down. So this is the beginning of the week. This Sunday night right here. And the trailing sell bot makes money again. No fill on the long side. The smallest 4 hour candle of the week. Can't even make it back to this. Can't make it back to that. And then frighteningly goes down here. Now here's where you have your big bank of limits. And now the trend bot, if it took something off, 30%, 20%, it made something there. And this triggered here. Sell stops. Here's where you're getting whipsawed a little bit, but if you're looking at the big picture, which is lack of volatility for 8 hours, lack of volatility. So nothing here. This is a big doji, explodes out, doesn't quite make it to here, but they scoop into this 16 hours of vacuum left behind. Small ATR here, true range, then explodes down, wipes out all of these trending money management systems, which were running trailing cells here. So they can't get this one, but they clean out these, and for whatever reason we die here. So you can't explain. You could want to explain this with Fibonacci maybe, and why did it turn around here? Why did it turn around here? And I would just say it simply ran out of willing sellers. You could take this into the future as a pivot and say, oh yeah, well, as soon as it closed there, like it went ding, it closed there. People are like, yeah, I don't think we're going down there again. Now that you could make that argument at the end of each candle, and what would be the argument at the end of each candle? And right now, you don't have a choice. You have to put a buy stop here and a sell stop here. So you have to run that system. And you'd have to say, okay, I'm just going to buy at the market right now with a stop maybe here. And I'm going to put in a buy limit here, and I'll put a buy limit here and one here. And I put a sell limit here and a sell limit here. And then once it starts to unfold, then you could, if you get the party started with just that, you just lay the frame of the obvious trades in, then you can come back and fill in the blanks here. Pretty tough. 1 hour chart's pretty tough. So I said the 4 hour chart, even though you're not a patient person, it doesn't, in other words, if I put sell limits up here, they're going to look like it's one ticket. You'd be like, holy shit. So to get 100K in here, it's going to look like something like this. And you'd be like, shit. And it's kind of frightening, but if you go to the 1 hour, you'd be like, that's never going to fill. So just your perception of risk and exposure to risk and potential fill of a trade plan. So all the plans you've made, right? So it's like if you wrote a bunch of songs, and of course, there's another reason why I never wanted to be a musician that wrote a bunch of songs. So I just have little segments of moods I wrote. Because, say you wrote a hit song, now you're enslaved to this song, you got to go out and play it, and people say, well, that'd be the word. No, it's a really problem, because now you have written in stone, and if it's your source of income, now you're fucked. And you can see how people would need to do drugs to go on tour, because they're like, dude, really? I play the same fucking song? I mean, it was hard in the beginning, and I don't even care about the money now. I just want to take a fucking nap. So I'm sure that occurs to people, the drudgery of having to perform the same song. But it's drudgery had to perform the same stupid trade over and over again. Like, oh yeah, it's going up, sell, it's going down, we buy. We're going to hold this trade. This is the next thing here, and it's just it's nothing glamorous about it. I suppose there's nothing glamorous about being famous. I guess when people come at it with they like the process of doing it, it's a different approach than if they come at it and say, well, I'm just going to try to make money. I can't imagine somebody writing songs like that. Why are you writing music? Oh, because I want to make some money. It's pretty tough, right? I mean, a little distracting to your performance. I think I said, what if you were playing a gig on stage and they had a tally running on the floor monitors, and you could see how much money you're making or what the record sales are as you're jamming out the song. And I guess this Aretha Franklin dies, so her record sales go up. Yeah, people are like, you know what? Yeah, fucking give me some of the, give me some of those tunes to listen to. But yeah, it's pretty wealthy. If you're on the internet, you're wealthy. So everybody on the internet is like a billionaire, because I guess, well, it's a luxury item. I mean, you don't need it. You don't even have to watch the weather. You just look out the window. You don't even have to really be that informed, I guess. The government's here to help you, right? I mean, we wouldn't have to do math at all. So I think how they dropped the leverage down, those Europeans, because 30-1 right there. Most people, you tell them 30-1, they're like, what? Hell, my car only goes to fifth gear. Like, so I guess it's the best thing for everybody. Just put everybody back in diapers. Make a true nanny state, authentic nanny state. So anyways, that's my 2 cents. That's my 200 pip opinion right there.